when we record our information into the accounting systems, the accounting system themselves uses another set of terms that you need to know and understand. All transactions will be recorded into a set of accounts. Those accounts are divided up into 5 main categories. We have assets, liabilities, owner's equity, revenue and expenses. And again, it's important for you to have an understanding of what those categories mean. These are terms that you hear on a day-to-day basis, often in a business, but unless you fully understand it, can be confusing. An asset is a term used for the things that a business owns. So when a business buys a piece of equipment, or buys a piece of furniture, or buys a car, or it might be larger pieces of equipment, those things will be recorded into the accounting system as an asset. So these are the things that the business owns. When a business owes money to people, those transactions will be recorded into the accounting system as a liability. So the liability accounts are recording everything that the business owes. So sometimes it will be the accounts payable and creditors, but other times it might be a bank loan. So liability accounts record how much the business owes to other people. Owner's equity accounts are recording the amount that the owner of the business has invested in the business. So it will be recording the amount of money or items that the owner is contributing to the business, and also records the amount of money or other stock or things that the owner might actually withdraw from the business. The revenue accounts will be recording the amount of income that the business is earning. So when you're making your sales or maybe earning commissions through your business activities, those transactions will be recorded and you'll be able to analyse them in the revenue section of the accounts. The expense area of the ledger will also be recording all of the expenses that the business incurs, but some of those expenses are called cost of sales. So when you're buying items that the business is using to then sell on to their clients to make their income, that will be under the cost of sales part of the expenses. So any costs that the business incur will go into the expense part of the ledger. So all transactions that are recorded in the accounting system are being recorded into the business's ledger. This ledger is again made up of those 5 categories: assets, liabilities, owner's equity, revenue and expenses. So all transactions have to affect at least one or maybe 2 of those different categories. Businesses create a list of accounts to record their transactions into, and that would be commonly called a chart of accounts. So each business will have a different chart of accounts that will reflect their specific types of transactions. So one business might have a set of lollies that they sell, so therefore their chart of accounts is going to reflect whatever they're doing their business on. So therefore no 2 chart of accounts will often be exactly the same because they're all modified in accordance with what the business needs. But all accounts must meet the same 5 categories, so they will all have to have assets, liabilities, owner's equity, revenue and expenses. When recording financial transactions, it is absolutely important that you make sure that you have got everything absolutely 100% accurate, because the information that you are feeding into your accounting system is being used for financial planning and also for your tax responsibilities. So therefore, if you're not sure about what you are recording, it's important for you to find out from your supervisor or your employer, and don't record anything until you're 100% sure that you are doing it correctly. GST is our goods and services tax system, so when you're recording your financial transactions, it's very important that you record the GST amounts accurately. If you receive an account from somebody, you need to make sure that you can see the GST component. If the amount has not got the GST itemised, the final amount can be divided by 11 to establish the GST component. If you are creating an invoice for somebody, the cost of your goods can have 10% added to them to provide you with the final price that you need to charge your client. Accounting is a very important responsibility that everybody in a workplace has, so it's important that you, if you are recording financial transactions, that you do it accurately, that you do it correctly, and that you are able to check with people if you don't understand. Everything has to be recorded in accordance with accounting rules and procedures, and if it's not done that way, it can cause a great deal of problems in a business. So if you're not sure, make sure that you know who to ask.